Okay, picture this. It's the very end of July. You've navigated the absolute chaos of tax season. You've scrambled for all your documents, and you finally, literally finally, hit submit right before that looming July 31st deadline. You let out a huge sigh of relief, right? You think, okay, I'm safe, the whole tax journey is over for the year. But then, maybe a few days or weeks later, your phone buzzes, and it's an email from the income tax department. Your heart drops to your stomach. You're thinking, did I make a mistake? Am I being audited? Do I owe them more money? Well, take a deep breath. Today, we're going to look closely at the source material and totally take the anxiety out of this whole post-tax filing season. Welcome to this explainer. Today, we're diving in and demystifying assessment year 2026-27. We are going to make complete sense of the complex tax season chaos, decode all those super intimidating post-filing notices, and honestly save you from some massive headaches and heavy penalties down the road. So whether you're literally filing today or you've already got your confirmation receipt in hand, this is exactly what you need to know. Okay, let's dive right into this. Here is our roadmap for today. First, we'll look at the July tax deadline. Second, the penalties for filing late. Third, we're going to understand 7 common tax notices. And fourth, exactly how to respond to those tax notices. So, Section 1, the July tax deadline. Look, if you haven't filed yet, you really might want to pick up the pace. The Income Tax Department has actually reported that over 5 core taxpayers, guys, that is more than 50 million people, have already successfully filed their returns for assessment year 2026-27. So there's this massive collective push happening right now to get this done, and the department is actively out there cautioning taxpayers against the last-minute rush. You definitely do not want to be left behind while the portal is completely overwhelmed with traffic. Now let's get perfectly clear on who exactly needs to file by when. If you're a salaried employee or a pensioner, today, July 31st, 2026, is your absolute deadline. That's it. But the system does give a little more breathing room for specific groups. Like if you have business or professional income that doesn't require an audit, your deadline is extended to August 31st. For businesses that do require an audit, you've got until October 31st. And look, if you just completely drop the ball, the absolute final cutoff to file a belated return is December 31st. But as you'll see in a second, that definitely comes with a cost. Now, you might be wondering, hey, do I even make enough money to have to file? Well, under the old tax regime, the exemption threshold is 2.5 lakh rupees. But remember, the new tax regime is the default now, and under that one, income up to 4 lakh rupees is exempt. If your taxable income crosses those limits, filing an ITR is absolutely mandatory. But here's a really fascinating detail from the tax laws that a lot of people missed. Even if you earn below those limits, you are still legally forced to file if you trigger certain lifestyle expenses. Specifically, if you spend 1 lakh rupees or more on your electricity bill during the year, or if you spend more than 2 lakh rupees on foreign travel, you have to file a return, completely regardless of your income. All right, moving on to Section 2, penalties for filing late. So, if you do end up filing a belated return by that December 31st cutoff, you're going to be hit with a late fee of up to 5,000 rupees. Now that drops to 1,000 rupees if your income is under 5 lakh. But on top of that flat fee, you'll also be charged 1% interest every single month on any unpaid tax. Honestly though, the hitting costs are way worse. So the crucial point is this: if you file late, you literally lose the ability to carry forward your investment or business losses to offset future taxes, except for house property losses. Plus, you completely lose the right to switch between the old and new tax regimes. You're basically locked into the default new regime, whether it's actually financially beneficial for you or not. Okay, real quick, we're about to cover the exact notices the tax department sends out and exactly how to handle them. But if this explainer is saving you from a massive tax headache right now, take just 1 second to hit subscribe and like this explainer. Your support is huge, and it helps us keep creating content that keeps you informed and keeps your wallet safe. Okay, let's get right back into it. Section 3, understanding 7 tax notices. So the Income Tax Department relies on these 7 specific sections of the tax code to communicate with you. And I know, just looking at numbers like 143.1 or 139.9 is enough to induce panic. But now, what's really interesting about this slide is that every single one of these numbers has a super simple practical purpose, ranging from a basic processing receipt all the way to a demand for additional tax. Let's break down exactly what each of these scary-sounding numbers actually means for you in plain English. Okay, the absolute most common communication you'll get is a Section 143.1 intimation. Do not panic if you see this one in your inbox. This is essentially just the department's standard receipt. It just means their computers have run the math and compared your numbers against their records. It'll simply inform you if your return is accepted as is, if a refund is on its way, or maybe if there's a minor discrepancy, which, by the way, is often just caused by a simple tax credit mismatch or a slight miscalculation of advance tax. Next up is Section 139.9, which is known as a defective return notice. Honestly, just think of this as a simple fix-it ticket. The department is basically just saying, hey, we can't process this because something is missing. This usually gets triggered if you accidentally picked the wrong ITR form, or maybe you forgot to fill out a mandatory schedule, or just left some income details incomplete. But the good news here, you generally get a full 15 days to correct the errors and resubmit it without any penalty at all. Now, things do get a little more serious with Sections 142.1 and 143.2. A 142.1 inquiry means the department simply needs more documents to verify your claims, or maybe they're gently nudging you because you haven't filed yet. A 143.2 scrutiny notice, however, means your return has been selected for a deep, detailed examination. Usually this happens if you've got high-value financial transactions or unusually large deduction claims. But listen closely to this. A scrutiny notice does not automatically imply you're evading taxes. No way. It just means you have to prove your math. You just have to substantiate your claims by making sure everything perfectly matches your Annual Information Statement, or AIS, and your Form 26AS. And now we reach Section 148, Income Escaping Assessment. Okay, this is a very serious notice. This email gets triggered when the department receives new information, or honestly, even finds old records, indicating that you hid income that should have been taxed. This frequently happens when taxpayers, quote-unquote, forget to report things like savings account interest, stock dividends, or capital gains. This absolutely underscores exactly why you must report every single source of income, literally no matter how small you think it is. Finally, let's look at Sections 156 and 245. These are the notices that are going to directly impact your wallet. A Section 156 demand notice means that after everything has been calculated, you owe the government more money, whether that's an additional tax, a penalty, or accrued interest. A Section 245 refund adjustment is a little bit different. This happens when you're expecting a refund this year, but you actually owe tax from a previous year. The department will issue this notice to basically say, hey, we're keeping your current refund to settle that ghost of tax seasons past. All right, Section 4, responding to tax notices. The good news is you don't need to mail physical letters or stand in long government lines anymore. The whole resolution process is handled online now, and this brilliantly illustrates just how streamlined the system has actually become. So here's what you do. First, log right into the e-filing portal using your credentials. Second, navigate over to your dashboard, click on Pending Actions, and select e-Proceedings. Third, you'll be able to view the exact specific notice issued in your name. And finally, you can submit your response right there. You simply state whether you agree or disagree with their assessment, type up a quick explanation, and upload your supporting documents. Once you hit Submit, you get a transaction ID for your records. It's really that straightforward. Look, getting a tax notice is stressful for sure. But as you've seen today, it's completely manageable when you actually understand the system. However, please remember that this explainer is just for educational purposes. A qualified tax expert is absolutely always your best friend for navigating specific, complex tax laws and making sure you respond correctly. If you found this breakdown helpful at all, drop your questions in the comments below, and definitely don't forget to subscribe to the channel for more clear, structured explainers exactly like this one. I want to leave you with one final thought before you log off today. If you've already filed, ask yourself this. Are you 100% sure the income you reported matches your Annual Information Statement in Form 26AS perfectly? Because honestly, if it doesn't, one of those 7 notices we just talked about might already be on its way to your inbox right now. Go double check your documents, stay organized, and we will see you in the next explainer.